Hey traders, Marcello here, founder of the Day Trading Academy. Today, we're answering Paul's question in the series of Ask Marcello. How do you minimize risk? So Paul, I do read the comments before I plan for the next video series, just to let you know. Question is,
do you read the comments to plan for the next video series? How do you manage risk? And do you have a risk management strategy to minimize risk? Want to become a day trader after years of consulting, but my wife has concerns and the risk question would need to be answered in order to sell her on my new direction.
So first thing, Paul, is you avoided the big risk of all, is making a decision without your wife. So I applaud you on that, my man. I kid. But I think this is a bit of a complicated question, my man. So I'm going to do my best to answer it because I have to kind of explain to you the way other people manage risk and the way it works in kind of other markets and the way I do it a little bit differently. Okay. So generally with Forex and stocks, there's something called margin, okay? So with margin is essentially in order to have leverage, in order to trade more with less money, they let you borrow money. That's called margin. You pay interest on that money, right? If you lose it, obviously you owe it and you have to pay the interest as well. So in the futures market, just to kind of, set the kind of baseline for this is, in the futures market, our margin is not the amount of money that we borrow to have leverage. It's the minimum of amount required in order to trade. The reason why it's different is because when you buy a Forex pair or you buy a stock, you're literally buying a tangible item, right? When you buy a share of stock shares, when you buy stocks, you're literally buying a percentage of the business. It's something that's quantifiable. When you buy or sell Forex, which I don't recommend, for many reasons, at least for beginners anyway, right? You're buying literally a currency, a dollar, a euro. When it comes to futures, there may be situations where you don't necessarily you're not buying something tangible. So futures started off with physical products, things like coffee, gold, silver, palladium, rhodium, meat, wheat, all kinds of stuff. Lean hog, petroleum, derivatives of petroleum, gas, all this stuff. So eventually they applied this futures contract system to financial products rather than physical products. So in order for us to minimize risk, I think one of the ways, Paul, that we already do that in the futures market is we're able to actually not have to borrow money to trade more or make more money. That's the first thing, right? So right now, we have historically, in the history of the world, the lowest interest rates for the longest period of time. This has never happened before, and nor is it going to stay like this forever, right? Eventually, the interest rates are going to have to rise. So if we think about what we need to be successful trading, we need to be consistent, right? The amount of money is relative. I know, I hate these guys on Forex that are or Instagram with the millions of dollars and the yachts and all this other stuff because I think it's so pointless. This business really isn't about making money. It's about being consistently profitable because if you start making $1 a day, you can start making 2 and then 4 and then 8, 16, 20, 50, 100 a day, however money you want to make. But you have to learn how to be consistent first. So the way that risk is managed in a way in the futures market is that you already have a much higher amount of leverage without having to borrow money and pay interest. Obviously, there is a downside to that, right? You can lose a lot of money as well. So just to give you a really quick comparison, Paul, is when you buy one stock, let's say we buy Apple at $100. We buy one share of stock. If it goes up $1, we make $1. That's 1% return. With futures, we can trade with a minimum of $500, and every dollar that the market goes up, we can make $50. Or if you're trading a market like silver, you can make $1,000, literally with a minimum of $500, $1,000, $2,000. So on the other side, obviously, there is a negative aspect of that as well, right? I try to kind of be transparent and really clear with you guys, is you can also lose that amount of money as well. So keep that in mind. So back to that's kind of the foundation. So I'm sorry it took like 5 minutes to kind of set the foundation for you, right, my man? But when it comes to managing risk, one of the things that I have found in this industry is that trading obviously isn't technical, it's psychological, right? So what we have to do is most people worry about 90% technical, they look for strategies and the holy grail indicator system and this guru who's supposedly trading millions of dollars and blah, 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 instead of focusing on the internal, right, what we have up here. Because we're not going to be necessarily able to trade like somebody else because we're not going to be comfortable being as aggressive or as conservative as somebody else. So we have to develop our own plan. So that's the first thing, right? You're going to be able to minimize risk by simplifying the process and doing the things that you feel comfortable with. So inside the Day Trading Academy, for example, I call this structure-based trading, where I'd say it's a variation of rules-based trading where we have strict rules that we abide by, where we get in and out of a trade, but also we work with you to be able to develop your own personal style according to the system so you feel comfortable, so you don't get yourself in a situation that you're not comfortable with. Then we always have a minimum 2-to-1 risk to reward ratio. That means if we're always going to lose, let's say $100 on a trade, we're always going to make a minimum of 200. So the idea is to, in the beginning, simplify the process, only trade one market. One of the reasons why I don't recommend people go into things like Forex or binary options is because it's a little bit too complicated. Outside of the fact that they're super, super, super manipulated markets, if you guys look on Google, the FBI is investigating binary options. The thing that we really have to do, Paul, more than anything is simplify the process, because if we have a million things going on and we're paying attention to a million indicators and a million charts and Forex, it's like 9 charts with 20 screens and we're looking at 9 different markets, Euro USD and all this other stuff, and then we need the indicator and blah, 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 just to take that one trade. Whereas if we simplify the process, right, we look at just one market to be able to master how to be able to read the market properly, then we can focus on things like being able to focus on our psychology. So minimum 2-to-1 risk versus reward. We train one market to be able to master it quickly. And obviously we have very, very, very strict rules on stop management, right? The first thing that I teach everybody at the Day Trading Academy, that we teach everybody, I should say, our team is pretty big now, is we want you to make sure that you don't lose money. Because not that you'll never lose money, because traders do lose money, but we win more than we lose if you're not going to blow an account and be successful at this. You have to make sure that it's more important not to lose than to win, put it that way, because it's a lot easier to lose money than it is to win, right? Learning how to trade is hard. And most people don't necessarily want to give up or sacrifice what they need to be able to learn how to do this. So essentially, we have a strategy that we use with as strict rules that always give us that minimum 2-to-1 risk versus reward ratio. And so we always win more than we lose, and we always have more winners than losers, meaning that we win more than 50% of the time. We had a trader, Paul, from Monterrey, Mexico on our Spanish team. He went back and back tested all of what we call the legacy trades, which is in our basic curriculum. They have specified rules of which ones to take. And the results were very promising. The results were definitely over 50% in terms of winning trades over losing trades. I'm not going to mention how much you quote unquote could have made, because I think that's really relative. And at the end of the day, what we try to focus on with all the traders at the Day Trading Academy is not to make money. Let's make you make the right decisions, because if you make the right decisions, then obviously you're going to be able to make money. So that's how I answer your question, my man. I hope I was thorough enough. I wanted some of these videos to be a little bit shorter, but I gave you a solid 9 minutes, my man. I got your back. Let me know if you guys have any questions. #AskMarcello. Don't forget to subscribe. See you next time.